Hi there, Steve Mitchell, Realtor with Johnson and Daniel Royal LePage. A lot of people have asked me recently, is now a good time to buy an investment condo? Prices are down, blah, 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 it's a good time to buy. Well, prices are down below Bloor Street in what we call in the Toronto Real Estate Board C01 and C08. Median price is down, driven by an explosion of listings during the pandemic and a deteriorating rental picture. So they're selling, but prices are down. Will they stay down? Doubt it. How fast will they recover? Don't know. So if you're thinking about buying an investment condo, there are other questions, though, that you need to ask yourself first about how much money have you got to put down, how much can you rent it for, what are the costs, and the all-important question, what's right for you? Hopefully this video answers some of those questions. Enjoy.
It's January, it's freezing, and I'm out here at Yonge and Eglinton, ooh, lovely Yonge and Eglinton, to talk to you about condos, specifically investing in condos. You can invest in new condos, like what's happening behind me. We can walk across the street and invest in existing condos, like the lovely art shop we have here. But no matter which kind of condo you want to invest in, what I want to know as your real estate agent is, what are your goals? Different investors, different goals. Perhaps you not only want a bank in the bottom of your building, you want the building itself to act like a bank, a store of value safe from the greedy talons of a hostile foreign government, or a hostile domestic one. I'll leave that to you. Or perhaps you want a condo to hold on to for now and have later for your kids when they leave high school, like North Toronto Collegiate here, which is situated right underneath a condo. These two motivations or goals are what I like to call qualitative factors. Sure, you don't want to lose money, but you're not looking necessarily for massive growth in your money either through income or capital gains. These are mostly defensive reasons for buying a condo. The other reasons for buying a condo as an investor are what I like to call qualitative. In other words, you are trying to make money. There are two ways to make money in condos. One, by capital appreciation, where your investment goes higher and higher over time. The other way, of course, is to make money through rental income. That means essentially going into the landlord business, facing competition like this erstwhile 30s apartment building, 4-story walk-up here at Condo Swamp, Yonge and Eglinton. NFL bucket of wings. Leave it to the Duke of Kent.
Okay, so we've enjoyed our wings. Now let's look at some of the basic math behind investing in condos. Okay, so assuming that you want to go into the landlord business and you're buying a condo to make money at least partially on that, as well as hopefully some capital gains over time through appreciation of your property, let's look at some condo investor math. Just some basics about how much you're going to have to lay out and will you break even each month from rental. So let's do some basic assumptions. First of all, we're going to assume $1,000 a square foot. Yes, some condos can be had for a little bit less, and some at premium locations and with premium build are still trying to command more than that. But what's happening right now in January 2021 is roughly $1,000 per square foot. Just makes the numbers easier and it's pretty accurate. Okay. You're going to buy a 550 square foot unit. You're not going to buy any 2 bedrooms. That's not what investors, that doesn't work for investors. You got to buy a studio, a 1 bedroom, maybe a 1 bedroom plus den, nice small unit with affordable rent. $550,000 purchase price, 1,000 times 550, pretty simple, but you're going to also have about $20,000 in land transfer tax and closing costs, lawyers, what have you. Let's call it 570. Rent revenue. Yeah, this is a whole different world now. This is not 2019 anymore. Back then, you'd be hard-pressed to get a decent studio for $1,800. Now, that's a 1 bedroom plus den for sure, even in great buildings. So I might be a little bit aggressive here even with that. You might not be able to quite get $1,800. As of, again, January 2021, post-COVID, students gone, you name it. Big problems with rental revenue. It's down significantly. You might do a little bit better than that, but let's call it 1,800. So with those things included and assumed, rental revenue of 1,800, you're going to have property taxes come right off the top of that every month. It's going to average about $150. Then you're going to have your condo fees, let's call it $350 for a newer building before they've found like major special assessments they have to hit you with for something that doesn't work right in the parking garage. But anyway, hopefully that won't occur. Let's call it $350 for this kind of a unit. So your real net revenue out of that $1,800 rent to pay the mortgage is $1,300 when you subtract those two things. At a 2% mortgage, and again, yes, this is all back of the envelope and approximate. You might be able to get a mortgage for a little less. You might have to do it for a little more if you don't have top credit, but let's just call it 2% mortgage right now. That's going to mean you can borrow up to $300,000 and service it with that $1,300. That's what it'll service. So, purchase price $570, less the $300,000 mortgage you're going to take out. Looks like your down payment's going to be about $270,000, or almost half the cost of the condo. And this is the deteriorating condo investor math that has happened over the last year. Now, again, will that change as we get through COVID-19 and have rents hopefully buoy back up to, the $400 higher or whatever that they were before, $500 in some cases? Yeah, they may, but boy, do you want to count on the future being a complete reversal? I don't know. But this is where it's at right now. It used to be around 40%, 35, 40%, but that's gotten worse over this last year. Think about it like 50% down in order to be rent neutral every month. Cash flow neutral, I should say. So the 4 questions are, and this is not the Passover Seder, just for those confused. Do you have $270,000? If you don't have $270,000 to put down, and if you're buying pre-construction, you don't have to put it down all at once. They entice you with the lower down payments initially, but over the course of a couple years, you're going to have to come up with $270,000, even if you're buying pre-con. If you're buying brand new, you'll need to come up with it all at once. Do you have it? Number 2, are you willing to put down less and pay up every month? So maybe you're still going to have to put down 20% minimum if it's an income property, unless you find some extremely accommodative bank, and that's going to be $110,000 at least. But you could put down less than $270,000, but you're going to have to kick in every month because you're not going to be able to service it entirely from rental income. What appreciation rate is your unit really going to get? And this is the $64,000 question. Okay, adjusted for inflation, $664,000. We've been on such a tear for 20 years, but this last year really has revealed a schism in the market. Ground-based housing, detached, semi, townhomes, that sort of thing, they've exploded, both in terms of price appreciation and in terms of volume of sales. People they're all selling quickly. Condos have gone up in terms of number of sales, but in the core, they're down single digits in terms of price versus a year ago. So much more uncertainty around how much and how quickly condos are going to appreciate. They've appreciated so much over the last 10 to 20 years. The question is, can that continue? And without a recovery in the rental market, will it actually go the other way and get worse? We don't know. Will investors start dumping their condos? Some will, some won't. Hard to say. And the last question you've got to answer for yourself is, what else could you be investing in? If you're not buying this thing for yourself to move into in a few years when you sell the big house, if you're not buying it for your kids to move in after they finish university or even high school or whatever, or for your aging parents, if you're not doing it for family type reasons like that, and you're doing it to make money, is it the best way to make money? Should you be just putting it in other things? Stocks, bonds, cottages, they're going up in price for sure. Investing in a business, perhaps one you already know, or paying down the mortgage you have on your principal residence. Never a bad thing. Even in these low rates, to have less mortgage. It allows you to borrow more if need be. And we never know where rates are going to go, although they look like they're going to be on the floor for a long time. So the two other ways you can build wealth in condo investment beyond rising property value and making money from the rental income after all expenses are at least twofold. One is the equity buildup, your net rental revenue paying down your mortgage. This is a long-term game though, okay? So in the early years, your tenant's paying you rent, you're plunking down that $1,300 after your costs that we indicated in the earlier example, and you're not spending it on anything else, and every month you're paying down your mortgage. That's great, but in the early years, most of that payment is going to pay interest, not principal. So you've got to be able to stick it out for a while. This is not going to have a big effect in the first 5 years. And the second thing, and this is very much dependent on your own personal circumstances, there may be taxation and accounting benefits to you owning an investment condo. See your accounting expert. It all depends on your personal circumstances, but there may be things that, even if you're losing money, help you in other areas of your affairs. But wait, there's more. As daunting as the math is that I've laid out, where you got to basically put down a 50% down payment in order to be cash flow neutral from your rent, there are other things to consider, other costs. Rising condo fees. You can't pass them on to your tenant. That's another hit. If you have a very new building, one that was never occupied before November 15, 2018, you may be able to pass them on if the market will bear. But generally speaking, no. It's not anything you can pass on automatically to tenant. You're held to the provincial rent increase guideline issued every August. Cost of vacant months. You own the place for 5 years. Chances of you having a tenant from your immediate get-go all the way to the end of the 5 years is very low. You'll probably have 2 tenants at least. So are they going to be completely seamless? Probably not. Harder to show a condo when it's tenanted. So there's going to be a few gap months there, and you may want a gap month here and there to go in and do a little freshen up. That's another cost. Months that you're not getting checks for. Insurance costs. You got to insure this just like any property. Tenants have their own insurance, but you need to carry regular property insurance on this for fire and everything else. Real estate commissions to find tenants. You can post an ad on Kijiji and other sites by yourself and administer the whole thing and have all kinds of unqualified people calling you, and then work through all the paperwork and then do the due diligence and phone their employer and all that. But for a commission of 1 month rent, why wouldn't you hire somebody who's a leasing expert like me? It's the best deal going in town. So end of pitch. I'm just telling you that's another cost, 1 month rent split between the 2 agents. Legal. Let's hope it doesn't come to this. Evictions, damages, could happen. It's a sad fact of life, hopefully not of your life. Repairs and upgrades. This is going to happen. I don't care how new your condo is, over time, normal wear and tear, flukes, whatever, things are going to go. You're going to have to put a new fuse in the fridge. There's going to be something that happens with a door coming ajar, a plumbing situation. Things are going to happen even with a new condo. Might not happen right away, but they're coming. Time, investment, and stress. Are you landlord material? This is another thing you should ask yourself before buying a condo as an investment. If you're a mom and pop condo investor, you've got some extra money, you think, wow, this is going to be great. Do you really want to get into the landlord business? Even if you get a great tenant, there is time involved. And, even the stress of those vacant months where, hey, I don't have any rent coming in. All of a sudden I've got to cover the mortgage. I got to cover this and that. So if you're down for it, great, but another thing to think about. And if you want to make it easier, you could hire a property management company, but again, that costs money. Well, I hope you found that helpful. Subscribe to the channel, that'd be great. Comments welcome as well, and even more welcome is a call, text, or email to me with your questions about your condo search or any other real estate needs. If you're looking for a condo, whether to invest in or live in on your own, please give me a call. I'd love to help. I'm Steve Mitchell. Thanks for watching.